Okay, guys, today we are going to talk about Fair Isaacs and the other credit rating agencies, what they're doing to monitor your credit, to look at your social media feeds specifically, to make a determination as to whether you are creditworthy or whether you are someone who poses a risk in terms of your ability to repay your credit. So we're starting to see credit rating agencies using AI, artificial intelligence, machine learning, to determine whether or not someone is creditworthy. I'll go over the article in a second, but it's a really troubling situation. I don't know if you are aware of this, but this will affect younger people significantly more than other people because younger people more likely have a tendency to use social media to post things and, posting libations, posting terms that are specifically focused on drinking or some kind of, what some would call depravity. I wouldn't call it depravity. I'd call it being a young person. But we're seeing social media or credit rating agencies using this data to determine whether someone is creditworthy, and it will eventually affect your credit score. Now, my question, and again, this is something that we'll get into on the video, is if you post positive things, what's going to happen? How will they determine that you're credit worthy as opposed to a credit risk? So it's the only thing that I see is that it could have a negative impact on your credit score. So check out the video. We will see how this works, and hopefully you'll be able to make sure you monitor what you say online to ensure that you don't have a negative credit rating. Hey guys, Dr. Ricky Keys here. I want to make sure that you understand something. I believe in equity of opportunity, not equity of outcome. So you see the thumbnail, you see what we are trying to address. I believe that this is an important issue that invariably we must address. One of the biggest challenges that I see is that we're starting to see credit rating agencies use other factors other than your credit history and other factors like your payment history, the amount that you have in terms of your debt to income, just all of those factors that are used to determine your credit score, to make a determination as to whether you are creditworthy or not. And ultimately, that will affect your credit score. So what I wanted to do is just have a conversation with you and really make you aware of some of the changes that are the changes happening with your credit score and how this will impact you. I believe that if you don't understand this, I think invariably you will have a significantly detrimental effect, meaning that your credit score will go down, and ultimately you're going to have, you're going to pay more for things. You're going to have to, you're going to be denied more often. And then, credit scores have a significant impact on not only your ability to get credit, but it also has an effect on your ability to get a job, insurance, and other factors. So it's critically important that you understand what factors contribute to your credit score, but more importantly, it's important that you understand that there are changes that are happening, and you need to be aware of these things. And at the end, I want to really talk about, some other factors, some things that I think are important. So this is an article by CNBC. I think it's a critically important article to really start the conversation off. It says Black and Hispanic Americans often have lower credit scores. Here's why they're hit harder. I think it's important to read this entire article, but this is the paragraph that I think you should pay attention to. About 54% of Black Americans report having no credit or a poor credit or a poor to fair credit score, which is considered to be any score below 640, according to a recent survey by 5,000 people, U.S. adults by Credit Sesame. And then about 41% of Hispanic Americans report falling into this category as well. So first of all, the populations that I'm specifically focused on, the African American and the Hispanic population, they report having poor credit from the beginning. And unfortunately, a lot of people don't know what goes into their credit score. But this is an important factor. The situation is that we don't know what this algorithm holds, or what the algorithm is used, or how it's made up, the credit score is made up. Now you are going to see another significant factor, and that is your social media posts. And again, I think this is an important article, but I think there are some questions in particular that these professors, one from the University of Georgia and the other from Virginia Tech, kind of lay out, so that this is a really good beginning to our conversation. What does your SAT score mean for your ability to pay off a car loan? What does your Facebook feed say about your chances of landing a mortgage? And what does your propensity for snacking on road trips mean for your credit score? These are three important questions. And again, the answer is more than you think. I think this is something that we need to pay close attention to, because our credit scores will be determined by our social media feeds, by our posts. And if you post negative things, you have a significantly higher chance of being denied access to credit. And let me say this real quick so that you'll understand. People think that there are three credit rating agencies. There's really a number of credit rating agencies. There's Equifax, TransUnion, and Experian, but then there's one that basically is the mother of all the credit rating agencies, and that's called Fair Isaacs. And Fair Isaacs, what they do is they have this AI technologies, and again, they factor in these things to make up your credit score. And unfortunately, what's happening is they're starting to use something else, and that's your social media posts. And again, this question that's being asked is what Fair Isaacs is now starting to move toward, looking at your credit, looking at your social media posts and determining whether you are credit worthy. This is another article is really interesting. It's five ways your social media habits can affect your credit score. I think you should pay attention again to these two, this paragraph in particular. According to an article by investors.com, credit rating agencies like Fair Isaacs are implementing new strategies for assessing a consumer's credit worthiness, and that includes information found on a social networking site and smartphone records. So again, we are starting to see that not your payment history, not factors like that, but your social media posts are now starting to be factors that contribute to your credit score. And again, this article by NPR, and this is really the one that I think is critically important. Could your social media footprint step on your credit history? I believe that, let's read this. And the CFPB is an agency that was set up to address the financial crisis that happened back in the day, and I think it's an agency that's critically important. All of these paragraphs are important, but this is the really important paragraph. It's a modern day iteration of the idea of character as commercial value. Companies going online to try to figure out your financial potential from posts and connections from Facebook, Twitter, and yes, LinkedIn. Professional context there are especially revealing of an applicant's character and capacity to repay. Another creditworthy startup founded told Economist.com or Economist in 2013. Now, this is the important factor. My biggest challenge is not that they are going on your social media feeds to determine whether you are creditworthy. My biggest challenge is, okay, if they do it, what is the impact on your ability to get credit and to get a job and other things? But the only thing they're going to look at is the negative factors. They're not going to look at positive factors. So how do you improve your credit if they're looking at negative situations or factors, including Facebook, Twitter, and LinkedIn? how do you improve your credit based on this factor? Do you get new friends? Do you post positive things? Do you post inspirational things? I just don't believe that the AI technology will afford you an opportunity to improve your credit. The only thing that this will have, the only effect that this will have is a negative effect on your credit. So it's critically important, number one, that you improve, monitor your credit. Number two, that you kind of, refrain from posting negative, adverse, drinking, belligerent kinds of posts on your social media feeds, because that invariably will have an impact on your credit score. And number three, that, we need to advocate for making changes to this, this black hole, if you will. I believe the algorithm is a black hole. Each agency, each credit rating agency or company has a different set of factors that contribute to how you make up your credit. And I think this is an absolute abomination. You don't know what you can do to improve your credit. Obviously, buying things on credit and paying that credit off on time, those things will impact your credit score. But I think it's just an abomination. It's really a troubling situation for people to have adverse impacts on their credit score and don't know how to improve it. That's on the financial side. Now, the social media side is going to be an even more troubling situation. So with that, I hope this video helps you. My name is Dr. Ricky Keys. My company is called TCB Plan, tcbplan.com. And what we are focused on is making sure that you have a plan to improve your financial situation, be it insurance, be it credit, be it budgeting, banking, all of these factors that contribute to your financial health. Our hope is to help you to improve your financial health. With that, again, my name is Dr. Ricky Keys. Please like, subscribe, and follow. Share this video, because I think your friends, your family members will be negatively impacted if they don't understand that social media posts will invariably play a role in what your score is. And especially younger people, because they are posting, kind of willy-nilly. They don't have a rhyme or reason to their digital footprint, and invariably it's going to have a negative impact on their ability to get credit, to get a job, to get insurance, and all these other factors. So again, Dr. Ricky Keys, I look forward to seeing you in the next video.